Hey guys, Derek Long here, Quest Trust Company. Today we're going to be going over a really unique topic, mainly because it's something that's just kind of came almost out of the blue. We're going to talk about some legislatives that I can't even talk, some bill changes that have been proposed. And so we wanted to do is bring in one of the smartest people, I think, in this industry, our CEO, chairman of the board, Mr. H. Quincy Long. So before we dive into this topic, we always want to remind people here, guys, that Quest, we are only here for your educational purposes, right? This entire class that we're getting ready to talk about and go over is strictly for you. It's only for education. We can't give any legal advice, can't give you any investment advice, can't give you tax advice. We don't endorse investments here, right? The whole purpose of this is to hopefully answer some questions you may have about up and coming bill changes. So if you are attending this event, make sure you're leveraging the chat box. I will be moderating the whole time. I'm going to do my best to get to every single person's question. Okay. So without any further ado, we don't want to waste a lot of time today, right? We want to dive right into today's topic. So Quincy, thank you so much for joining us. You honestly have probably inspired more people in the self-directed world than anyone else out there. I know there's higher end attorneys like John Heyer and Jeff Watson, even they look up to you in these areas. And when this new bills that kind of have been proposed started to come about, right, I think it freaked out a lot of people. So can you give us just a rundown of what was proposed?
Sure, no problem. First of all, I want to dispel something that some people seem to have the attitude that this is just a bill affecting rich people. And that's just not true. There are some provisions affecting high income, high net amount in their retirement plans, but they're not much. So I'm going to get those out of the way, if you don't mind. So what do they define as a rich person? And I'm being a little bit, tongue in cheek with this, but rich people's problems are people that have $400,000 as an individual of income, $425,000 if they're head of household, or $450,000 as a married couple. Those are these thresholds that the changes started to take place. And if you're you have to meet both of these tests, both be over $10 million in all of your combined retirement funds. So that's your 401k, your Roth IRA, your traditional IRA. If you have more than $10 million of money in those accounts, and you have over $450,000 as a married couple, or the other things I mentioned, then you're no longer able to do any kind of Roth contribution. Okay, so no more contributions. If you have over $2.5 million in your defined contribution plan, that's a 401k, for example, then the employer has to give a special report to the IRS about you and your number, Social Security number, and what's anticipated and all of that. That's really not comforting. And finally, on this part of it, you must withdraw from the IRA or from your retirement plans the difference between what you have and $10 million. So if you have $12 million in total retirement assets, then the next year you have a required minimum distribution of $1 million. And so that's the way they keep it down. And also, if you have more than 20 million, you have to to take distributions for anything it takes to get down to $10 million, get down to $20 million, 100% of everything down to that point, starting with your Roth IRAs and Roth 401ks, and then going on down to at least 20 million. So that's quite a deal for big people with lots of money. The second thing that I want to say is there's another issue, and that has to do with Roth conversions. And I kind of said that already. Roth conversions you can't do if you meet the income test. Now, for the Roth conversions restriction, you you only have to meet the income test. You don't have to meet the $10 million test. So the stuff that requires both $10 million and over $450,000 per married couple are no more contributions to the Roth or traditional. Over $2.5 million you have to report to the IRS, and the withdrawal requirements that we set. So that's the extent of what the rich person's restrictions are under this bill, if it passes.
Now, I know there's so many more restrictions coming up that we're going to be talking about, but let's just take a moment there and talk about that conversion, if that's okay. So I just want to clarify. So if I'm an individual making $400,000 a year, I would no longer even be able to qualify for a Roth conversion. I can't contribute to a traditional IRA and contribute and then just do a conversion real quick.
Oh, that's right. We're going to talk about that too.
Okay.
But I'm just going through the summary. So probably most of the people on this line don't have any of that applied to them. So now I'm going to go for the rest of us, what the rest of us can do. And ironically, the backdoor Roth is the next topic. Okay. So the backdoor Roth, I think you have a question on this later, but I'll just answer it now. The backdoor Roth, the way that works is guys like me who make too much money to directly contribute to a Roth. We have this trick, and it's well known. And the trick is that we put after-tax contributions into our IRA, traditional IRA, and then convert it to a Roth immediately. So it goes in the traditional, it's after-tax contribution, and it goes into the Roth through a Roth conversion immediately. So basically for the last several years, there's been no income limitation for this. Now, after-tax contribution, what does that mean? It means you haven't taken any deduction for the contribution, and you've notified the IRS by attaching Form 8606 to your tax return. So that's all nice and irrelevant if this bill gets passed, because what they've said is no wonder what your income level is.
Oh, somebody.
Actually, that's a good question, Bob. No matter what your income level is, you can't convert after-tax contributions to either a 401k or other qualified plan or an IRA. And that kills the whole idea of doing a backdoor Roth. So by shutting down that provision, regardless of income, you don't get to do that anymore. So that's shut down. Now, I saw a question from Bob, and he had said, what is the 400K or 450K, whatever it is? It's your taxable money. So it goes all the way down to right above where you declare your taxes. So I might make $600,000, but have only $400,000 of taxable money. So that's a good question, Bob. Thank you for that. So that was the one thing. It also, this next thing is something that's really rough. Really going to kill a lot of people's retirement. It's really going to hurt the capital markets. I mean, it's just awful. It's effective January 1st, 2022, the IRAs will no longer be able to hold any security that is conditioned upon certain factors. For example, education level or assets and income. So the specific example they gave in the legislation is accredited investors. For you could not hold in your IRA any kind of investment that required you to be an accredited investor. And that's true, by the way, if you had it before or you funded it after. I mean, after January 1st, 2022, you couldn't fund it at all. But if you had it before that, you can, you have only 2 years to take it out. So in other words, if I fund today an accredited investor investment, I've got to have it out of that account or closed out by December 31st, 2023. If I didn't have it then I'm not going to be able to do another funding of that kind of investment at all. That's pretty harsh.
It is.
And the 2-year transition period is ridiculous. Because typically limited partnerships that I'm involved in run for years. Because they buy an asset and they fix it up or build a building or do whatever. And then it may be years producing income. They don't just go away in 2 years.
Yeah.
Well, if you think about what they're trying to do here, if they force you to take that out in 2 years, then they're basically doing a tax grab. And what's going to be the value of that asset coming out of your IRA? Because there'll be lots of people having the same problem. So people are going to pay a lot of taxes, or they're going to sell their investments at a discount, or it's just unimaginably stupid.
I know. Before we keep going too far, can I get to some of the questions people are asking you? Is that okay?
Okay.
Yep. The only reason why is just so we can kind of tackle them because they're kind of in a session of what you're stating, but we're going to jump back to a young lady by the name of Anna. Anna just asked, just for clarification, the backdoor Roth, okay, regardless of income level, you won't be able to do a conversion, or is it only if you're making more than that for 450? Let's just
no. If you make under the limit, you can do a Roth conversion, but you can't do a backdoor Roth.
Okay.
But basically the backdoor Roth is killed because you can't convert after-tax contributions. So you can't do what I've done, which is put money in traditional, immediately convert it to a Roth. So if you're under 450, you can still do it, a conversion in general, but you don't need to be able to put that after-tax money into your Roth.
Perfect. Then does this just apply to after-tax IRAs or also before-tax IRA contributions? What I think they're really asking is more like, if I have a Roth 401k, am I still going to be able to contribute to that even if I have a high income limit?
Yes, that's not the test.
Okay.
The test is if you have both high income and high balances, meaning over $10 million in all your collective accounts. You can still, the Roth 401k still exists. It's still fine, but it just counts toward the overall limit.
Awesome. And then I'm just trying to skim through these. I'll answer some of your guys' questions. I promise I'll answer them just in the chat box as we're going through them, just so we can kind of keep going. Does this affect investments in an HSA or ESA, right? Let's say my HSA did a PE investment. That's
a good question. No, it does not affect it. Right now, it only affects IRAs, defined contribution plans like 401ks and Roth IRAs.
Gotcha.
So that's a good question.
All right. I'll let you kind of keep continuing, and I'm going to answer everyone's questions, and I'm just going to kind of type through them, Quincy. So I'm sorry to interrupt.
So then it also doubles the statute of limitations from 3 to 6 years for, get this now, valuation related reporting and prohibited transactions. So you guys think maybe that we're too tough on you on valuations? It's going to get tougher if this legislation gets passed, because they know you're going to be distributing it. And here's the other big one. The first big one was the accredited investor type investments. The next one is, believe it or not, they want to prohibit from investing in an entity in which the IRA owner owns 10% or more, either directly or indirectly. That doesn't sound like a big deal. You're thinking they're just adding a restriction in the prohibited transaction rules. No, they're changing Section 408 of the Internal Revenue Code, which is not prohibited transaction. It is the rules for creating the IRA in the first place. And so there used to be 6 requirements for it to be a valid IRA. Now there's 7, would be 7. And the 7th one is you can't hold any investment in which you hold either directly or indirectly 10% 10% or more. So don't make any mistakes about this. Don't forget to say it's 10% or more that you can. You have to not be IRAs or related parties to you. It's not more than 10%. So if you did 10%, your IRA is disqualified, because that's the penalty for doing this. Your IRA is disqualified. It's like you did a prohibited transaction, and your IRA is deemed to be no longer an IRA as of January 1st in the year you did that. So that means if the bill passes and you have an accredited investor type investment, it's got to be disposed of before the end of 23, or your IRA is disqualified. If you have, any kind of other entity investment, you're going to have to dispose of that, or it becomes disqualified. And it's just incredible that they would propose something like this. So I don't know. Now, also, I want to point out what's intended by the directly or indirectly. Derek, you probably know that indirect prohibited transactions are something that we pretty much understand, right?
That's correct. It's probably what we deal with more often. Very rarely do we actually deal with a direct prohibited transaction. Those
Exactly.
are easy to spot, and hey,
right.
Indirect.
So, in the context of this section, indirectly means indirect ownership, and in there, the constructive ownership rules apply, as modified by Section 4975E2. And so, what that means is that if you own it, your wife owns it, your parents, your grandparents own it, your kids, their spouses own it, any part, that counts against the 10% limit. So that means that they're cutting off a whole bunch of possible future ones, but don't forget, after the 2-year limitations period, the 2-year curable period, your IRA will not be an IRA if they find you with an entity investment in which you or any of your family members that are disqualified persons owning 10% or more of that asset. So that's pretty serious. And
that's going to, sorry, go ahead.
Go ahead.
I was say, so just so you guys are aware, it's when he's talking about these things, right? If your IRA is doing some sort of thing where you're investing into something where you had to be accredited or sophisticated or have some sort of special knowledge, this is going to hold true for most multifamily deals, senior living complexes, storage units, all of them. Your IRA will no longer be able to hold those investments. You have 2 years to get rid of it. Right. And like Quincy was saying, most of us that have done a syndication type deal, your deal doesn't pay out for 5 years, 7 years, maybe more. So what are we going to do in those cases is you got to come up with a way to get it out of the IRA. B, that 10% that he's really talking about is going to probably, and I'm sure you're going to talk about this here in a second, eliminate a lot of the ways people have tried to do their checkbook control.
Oh, let's talk about that, Derek.
Mm-hmm.
So we talked about it being, the 10% rule, right? Well, separately from that, they have said that if the IRA owner is an officer, and they said officer in the summary, but the real rule is officer, director, or persons having similar responsibilities to an officer or director. That's a checkbook control LLC. That's done. It's dead. It's completely impermissible. So that's another little factor.
Yeah.
And that
years
also,
have you been saying that that's going to die eventually, and people have just ignored you?
Well, that's true. I don't want to be right in this case. And the final thing that they did was just do they added the IRA owner as a disqualified person in the prohibited transaction rules. I'm going well, anybody that knows me knows that they've always been a disqualified person, at least in the context of self-directed IRAs, but they felt they needed to clarify that. So that's the long answer to the short thing. So we can just take questions from here on out, Derek.
Yeah, so the question line has blown up. I probably have about 40 of them, and that's not an exaggeration. So one of the things that are kind of popping up here is, all right, can my IRA then still invest into a personal property trust or some sort of trust, and the trust go out and do the investment?
No.
If this bill was to pass.
If the IRA and disqualified persons own 10% or more, the answer is no. So,
So
then the question becomes, okay, well, if that's no, what do I do in the 2 years? Either got to take it out, close out the investment, or distribute the assets from the trust, put them back in the IRA so they've been held directly. Can you imagine the nightmare of this?
It's going to be insane. Remember, for anyone out there that holds these type of investments, and for Quest, we call it a PE investment or private entity investment. This is probably going to affect each and every one of you, okay, that have done some sort of PE style type deal. Now, a couple of times I got a few questions about the solo 401k or a QRP plan. From the way I've read it, it doesn't affect the 401k yet. But what are your thoughts on these type of bills affecting the solo 401k?
Good question. There's nothing that says that the investment restrictions that I talked about affect 401ks at this time. Of course, I could change that, but there's nothing in this bill. Okay. But they do count towards the $10 million limit. So they are affected in that sense, but not affected by the restriction that we talked about, except for what we just said. I'm sorry.
No worries. Now, I have some questions here about partnering when we talk about notes and physical property. So how is this going to affect my IRA owning a property physically, or does it at all?
Well, it doesn't right now.
As of now. Okay. So right now, that means that our clients could still be doing, assuming this bill passed, right? These bills on an individual level went through, they could still be doing a lot of investments from real estate to notes, correct?
That's right now. That's the situation. That's correct.
Bam. What are the likelihoods of this type of bill passing?
Well, for that, Derek, you need to read the news and see how the plan is going. Because if it gets through, the likelihood is we probably wouldn't have time to delete this. If you think about it, this is a revenue raising bill. So they have to have money coming in. And if I calculate it right, distributing all entity assets where the IRA owner and or his family own 10% or more is going to disqualify about, 30, 40% of the assets at Quest. And all of your people that have relied on trust for all those years, sorry, you either got to take it out of the IRA or take the assets and put them directly in the IRA.
So, guys, I'm trying to get to all your questions. I know there's so many of them here, and they're kind of, they just keep popping up. So we're doing our best. Can you give me maybe a solution? Is there something we can do on an individual basis to maybe help not let this bill go through?
Well, obviously, we're all doing campaigns to our congressmen and senators. It's important to get to the people that are voting on the bill, right? Mm-hmm. And realize you're not going to likely change most senators and most congressmen's deals, but you can, believe me, I used to work in a politician's office as a page, and it was a lot of fun. But, it's contacting the congressman. And Derek, I think we have a letter.
Yep. And I'm going to get you guys a letter and some links for that here in just a minute, guys. I got a good question from a gentleman by the name of Dan. Can you expand a little bit more on the 10% rule? Does this mean my IRA can no longer set up an LLC or a trust, even if I'm not the trustee or manager?
That's correct.
So pretty plain and simple, right? So a lot of us have leveraged these type of, and I'm one of them. I've used my IRA to partner multiple IRAs together to set up a trust, and the trust went out and purchased an asset, being mineral rights for me.
Well, you'll have to distribute that in the next 2 years or close out the investment, or convey it directly back to your IRA.
That's correct. So, someone asked, would this apply to inherited IRAs? I'm going to say, yeah, absolutely it would. All these rules still apply to an inherited IRA the same way it would a traditional Roth IRA. Would you agree?
Yes, they would, except for the inheriting an IRA is not considered an addition and a prohibited addition. So if you inherit an IRA, it's not going to mean you get over the $10 million mark from the inherited IRA. So it counts towards that, but it doesn't count as, a prohibited thing to inherit the IRA.
I'm getting a lot of questions on trust and LLC, guys. So long story short, just to shorten it up, understand that the IRAs no longer would be able to set up that trust or LLC, even if you're not the trustee or manager. And if you have one of those assets, all right, that's set up that way, you have 2 years, assuming this bill passes, to change that asset, okay? To either have it distributed, pay it back, something along those lines. Can you get back to the F&B aspect for a minute? A lot of people, for a long time, we've had to require these fair market values and stuff. Assuming these things kind of go through, how is that going to change? How are we going to go through some of these fair market value aspects?
Well, of course, the details are not available yet, but because we've always taken the position at Quest is that, well, we'll take less solid information if we're just trying to value something where there's no distribution, right? It's just like, for example, a person with more than 5 years with a Roth IRA, who cares what it's valued at? Now, the IRS doesn't feel that way, but who cares what it's valued at? Because it's going to be tax-free anyway. You follow me?
Mm-hmm.
Now it's not going to be the situation because we know that these entity investments are going to have to be distributed. So we're going to have to be a bit more rigid on the valuation issues to make sure we're reporting the taxes correctly.
Going through single family rentals, solo 401ks. Well, I have to dissolve the personal property trust. What is the bill's specific name? Like, I've given out the numbers, right? Because what I kind of been telling people is it's the physical bill numbers range from 138301 all the way down to 138314. But what's the physical bill's name? Is there one?
Yeah, I'm not really sure about that. It's the budget reconciliation bill. That will get you farther where you need to go. It was held to get a copy of the actual bill itself. It's 881 pages. And I think it's just the budget reconciliation bill. But I don't have the front page. I only have the 40 or so pages that apply to IRAs in front of me. But we'll get that information out to you.
Yes, we will. So a couple things is I wanted to maybe start to share and talk about some of those letters and stuff that you mentioned about reaching out to Congress, because obviously, we don't want people to go through these motions, or we don't want this bill to pass, and we don't want people to be freaking out at this point in time.
That's
so
right.
Let's say I'm a brand new client. I call Quest. Do you think it's okay for us still to go through this syndication process, right? Is it okay for them to go ahead and still do an investment?
Well, we can fund them, but you're going to have to distribute them in 2 years if you don't, well, you just have to distribute them within 2 years, unless, of course, you and other related parties own less than 10%.
Perfect.
So in a lot of the syndications, the people own way less than 10%. So I suppose in that sense, we could do those all day long.
But even with the syndications, I feel like most of them should be applying or having accredited investors or sophisticated or something. So,
right.
A couple of people asking, so if I own a note, I lent some money out, right? Will my note be affected even if it's part of multiple IRAs? Ultimately, no, at this point in time. I always like to say at this point in time, because this is usually just seems to be a stepping stone, right? It can always lead to another stepping stone in the future. Is that a safe assumption?
Well, if you want to get really into legal details, which I don't think, that's what we're talking about, a joint venture is considered a partnership under tax law. And so technically, I suppose you could argue that could be seen as a violation, but I can't really see them pursuing that, especially with everything else going on. So it's certainly you can't form a trust and have everybody invest in the trust and then do the note. That you can't do. If I had to guess, and since I don't give tax legal investment or deal structure advice, it's just a guess, not worth the pixels on your screen. I would say you can probably still joint venture a note by having each person own a percent of the note. However, notes can be securities. So if you're parceling it out and saying, okay, I have 100,000, who wants to put in 10,000? Who wants to put in 20,000? Then that's probably going to be a security, and that's going to be a problem.
So I had a couple questions about contributing to a Roth portion of a 401k. All right. And it seems like it's coming down to one specific section. All right. But let's say, here, I'm an employee at Quest. I contribute to my Roth portion of my 401k. Will that portion alone be affected? Will I be able to still roll that out after I, 10, 20 years into a Roth IRA?
Absolutely.
Okay. So that portion is not being affected at all when it comes to the 401k?
No, not right now.
Okay. Not right now. I always like how you have to add that in there. So a couple things is, I know we do a lot of work with people like Jeff Watson and John Heyer, just because they are some other IRA attorneys. And one of them kind of went through and created a website that kind of goes through the proposal of the law and what to do in those cases, and it has some letters in there. Do you mind if I share my screen and we look at some of those letters?
Oh, go ahead. That's right.
Absolutely. So the first thing, and I'm going to go ahead and post this right here in the chat box for everybody, is I kind of like the name of it. I think it's unique, but it's labeled handsoffmyira.com. Now, what I like about this is it talks about the proposed law, right? And you can go ahead and click on this and it'll describe what it does, but I like what to do. So when we go through what to do in this aspect, you can download a letter, right? That is almost kind of pre-written a little bit. Make sure you make it your own and stuff like that to send off to your senators and your congressmen and women out there. Just stress making your points known, And I think this is something that a lot of people need to take advantage of, right? You can download a copy of the letter right here. You can figure out who is your point of contact, right? That you could stress, make some noise, right? You can stress your point. You can make your voice heard. So I firmly believe that everyone out there, if you're scared and you're nervous and you're worried about this bill, maybe it makes sense for them to kind of maybe check this out and make some noise. Would you agree?
Absolutely. That's the way it worked. And when I worked in the senator's office as a page, it was like, try not to make it too complex. Bullet points are great. Because all they want to know is they're not going to read the individual letter. Probably not. Mostly they're going to read oppose or not. So I was going to write to my congressman, but I'm going to make it a bullet point list. But whatever you do, make it clear in the heading or in the RE or something that you oppose these sections of the bill. So that's the key thing that they're going to be looking for.
And remember, guys, if you don't know who you should be writing, what's nice is this website gives you this link right here. You can click on the link and it will bring you directly through, right? And then you just, hey, find your rep by typing in your zip. You type in your zip and then it allows you to email the representative that you should be working with, or et cetera. So I do think this is actually a really cool individual site that, some attorneys went through and made just to help people in this aspect so they can really start to understand what this bill is going through.
Well, I have to say at this point, I hate to do this, but I kind of confused myself for a minute there and misspoke earlier when I said that we could still do accredited investor investments as long as it's below 10%. Those are two separate rules. No, you cannot do accredited investor type investments at all. And the 10% rule is for everything else, like trusts, LLCs, corporations, whatnot.
The people that focus more on the checkbook control, I always type to say maybe.
And the checkbook control is a separate provision from the 10% provision. Checkbook control is just barred. There's no touchy-feely with that.
So Got a couple more questions here before we kind of start to close things out, guys, right? And make sure you access this recording, okay? One of them real quick from a young lady by the name of Ashley is, can you please clarify how syndication deals will be affected? And I'm just going to say straight up, you can't do them anymore in the self-directed IRA if this bill passes.
That's right.
Huh? Can't do it. And if you hold one of those syndication deals, you have 2 years to get it out of the IRA.
Well, to close it out or to take a distribution.
Yep. Now, one of the questions that kind of popped up that I thought was unique, and it actually made me smile a little bit. How will this affect Quest? And like, would we have to shut our doors, right? If this bill passed, would Quest no longer be around? What do you think?
Well, I think the answer to that is no, it won't affect us in that way. You know, some people may lose their jobs because also be doing with less income. I think we have an estimate that as of this moment, it would end up costing us about $3 million a year. So we'd have to do some trimming, but we would pick up on business that other custodians who are going out of business would do, and we'd rebuild in that sense. And I suspect that eventually this will get corrected to some level. But now this is only a proposed bill, but it's part of a revenue raising bill. And what do you think the tax effect is of having all those distributions? They want to collect taxes. So even though this may not pass in its current form, expect some of these things to be in the final bill or in a bill in the future. So just recognize that that's a possibility. And I see a question coming up repeatedly. Can you invest in real estate and notes? The answer is yes.
Yeah. So that's the thing, guys, is remember that from a self-directed side, right, we deal in a lot more things than just syndications investments, right? For the longest time, the majority of our investments came across as notes. In addition, a lot of our clients use their IRA to buy a property directly, whether it's a rental property, right? They're going to try to do some sort of seller finance aspect. Sometimes we've seen a couple of fix and flips here and there, you know, but note that the IRA on a self-directed side can still do a lot of investments, right? It really, really can. And I don't foresee Quest going anywhere in the near future. So I'm always going to be here to help anyone out. And I think, Quincy, you feel the same way, that you've really built a strong company in the aspect of making sure that people are here to educate individuals. We still have a non-automated line. You can call us right now and the phone will ring and someone will pick up the phone. You don't press 1 for this, 2 for that. Someone answers. And we're always going to stick true to that. We're going to do everything we can to make sure we can help every single one of you guys understand what we can go through. So,
I think here's the immediate effects is that, you know, you won't be able to do these. We won't be able to fund these investments after the end of the year. That's the first immediate effect. The real crazy effects are going to be 2 years when people have to have those things out of the IRA. If it passes, then that's going to be a real incredible thing, because people can say, well, do I distribute? Do I just convey the assets to my IRA directly? You know, what am I going to do? Do I sell the investment? And that's where the real problem is going to be. It's not going to be January 1, 2022. It'll be much later before the full effect hits.
So, guys, a couple things out there real fast is with these type of bills, when they come about, make sure your voice is heard. Make sure you're making enough noise. All right. If you have questions, give us a call. We have IRA specialists on staff that can help answer some of your questions that may come up to a degree. Understand, we're not attorneys, right? I'm not a CPA. We can't give you tax advice or legal advice, right? So we can I always like to say we can bring it up to the line, but we can't cross it. So that's where a lot of times you got to reach out to some of these other individuals, you know, people like Jeff Watson and John Heyer, just as an example. But I don't want people to freak out too much. What I wanted to do is just remind people that in these situations, okay, what to do, you know, and so 1 minute, let's see.
Make noise is what you need to do.
Absolutely. So what to do is, first off, make some noise, write your congressmen and women and let your voice be heard. Remember that we gave you this link down below, and I saw Ingrid posted it as well, but this will really help in just getting our point across and your point across, right? We want to see everyone stick with self-directed IRAs. We want to see everyone doing these type of investments because it's where you can make some good money. It's where you understand what your money is doing. We love to see people go out and touch, feel, see, look at their investments because it's what helps them understand. All right. Lastly, I always like to say is make sure you guys don't miss the boat then. We don't want to see anyone missing out on setting up a Roth IRA or something while we still have the ability to do these type of Roth conversions. All right. You need to set up a Roth IRA here. I would argue before the end of the week. It doesn't matter if it's with Quest. It definitely doesn't matter if it's with your local custodian, your Wells Fargo, your Fidelity's, your Charles Schwab. Everyone out there should probably be thinking of setting up a Roth IRA. If you want to set one up at Roth, we're going to waive your application fees. We really are. We're going to give you a Roth Rush sale just to make sure that it's easy for everyone out there so you don't have to think about what's going on, right? Get those accounts set up to make your contributions, right? We don't ever want to see anyone missing the boat in these type of areas. If you would like more information on these, please email your IRA specialist, right? It's just iraspecialist@questtrust.com. You can contact Juan Deshawn directly. He put his email down there. But ultimately, guys, we're here for you. So Quincy, before we kind of close things out, is there anything that you want to just maybe elaborate on and stuff just as a closing aspect?
No, it's pretty much said it all. I mean, it's almost incomprehensible, the disaster that this could be. And we really need to try to stop it. The only good news of the day is that the Democrats are so divided, it seems unlikely that it'll go through, at least in its current form. But we had no notice of this coming until the bill came out of the subcommittee in the House Ways and Means Committee. And it was a big surprise to everyone. We knew the dollar limits on IRAs were coming. And that's because they're trying to go after people like Peter Thiel that started with $2,000 and have a $5 billion with a B, $5 billion Roth IRA because he invested, in startups like Facebook and whatnot. And so, so just realize that. And so we knew that was coming, but when the bill bounced out, we said that basically they're going to shut down half of our business or more. That was a real big surprise. So we've had put a lot of effort into getting the word out, and all of you should do the same. Even if you don't understand everybody, refer them to that website or have them listen to this tape and, get the noise out there. Maybe we can stop it. Hopefully the bill won't pass at all, or if it does pass, it won't be until a future date where we can have more time to work on this, because we've only had like a week since we discovered this. Mm-hmm. And if you're a busy congressman and you've got all the stuff going on right now, you can imagine how busy they are, right? So absolutely. Capturing their attention is going to be hard. And the only way we can do it is to make a lot of noise.
So guys, if you hear the theme of this is make some noise. If you have a Facebook, this right now, share it on Facebook. Make this go viral. Let people see it. Let people hear the education. Let them know that Quest is here to help out and answer questions. That's what we're here for, guys. Set up a Roth IRA so you don't miss the boats. That's why we're waiving you the fee. Honestly, that's all we got. It really is. So thank you, Quincy. Your time is very valuable. You really have inspired so many people, not just on this call alone, and I don't know if you're watching, but a lot of people are telling you thank you very much. Very informative. But a lot of people in our industry, including other companies, have always looked up to Quincy Long. So Quincy, thank you. I appreciate you being here. So
right. Thank you for having me. I'm sorry I'm not more eloquent, but that's the way it goes. At least I have the information.
Yeah. So thanks, everybody. Once again, reach out to us. Let us know. We'll set you up accounts. We'll answer your questions and just send me an email, okay? Thanks, everybody.
Bye.